Hey Benjamin, this is Ryan with TrendLizard.com. Happy holidays. I'm taking a look at XLB, the materials ETF trading on the NYSE here for you. It started back in 1998, late 1998. Pulled back a little bit into the 2002 low, had a really nice uptrend from there into the 2008 high, and then completely tanked into the 2009 low. And this is where we start our coverage. I'm not really concerned with anything that happened before here because it's kind of a moot point. The only thing that really matters to us is what's happened off the 2009 low. And for the most part, it has followed the guideline of what we've been seeing from all our other market sector ETFs, in that it appears that it began the fifth wave of this long-term advance in early 2016 after a larger pullback in 2015. So it looks very similar, again, to several of the other ETFs we follow. So the real purpose is to determine how long can this advance off the 2016 low go? Should we expect it to continue higher? And how can you trade it to capitalize on whatever moves it does put together? So that's where we're at. One thing you might notice is kind of this funky second wave pullback here. I have it starting in early 2010 instead of off of this higher high in 2011. It just makes a lot more sense to label it this way for several different reasons, making this kind of a running correction. That may interest you, it may not, but I just wanted to point it out because it's a little bit unorthodox labeling right here. But it does make for a better labeling all around, because that way this pullback doesn't overlap with this high, so on and so forth. So anyway, I want to zoom in and look at this fifth wave advance. Here we go. Here's a closer look at the advance off the 2016 low. It's a really nice move, which is why I'm guessing you're taking a look at it. Very trendy. It appears as if the initial up leg off the 2016 low ended in, what is that? It looks like late July. There's a larger pullback that very well may be over. It's hard to tell for sure. It's just now set a new high, but it could turn around and give a larger pullback before it continues higher. Whether it does or not, I think higher prices have to be expected overall. This looks like the first wave of a larger five-wave move, so this has a ton of upside potential overall, just like our other market sector ETFs do. As far as trading it is concerned, I would look to buy it around 50-50. And from there, you can put a stop level in at about 47.50, so you have about a 3-point risk. The entry level is a little bit higher, just to build a little bit more confidence that this pullback is over and that the uptrend has resumed from there. So again, if I was buying it, I would get in at 50.50. I would put the stop in at 47.50 and then trail that stop as the move continues. And overall, like I said, there's just a ton of potential that it's going to continue significantly higher from here. So I consider this a very strong trade, along with a lot of the other U.S. market sectors at this time. So I hope that's helpful. I'll take a look at a couple other ETFs for you in just a moment. Talk to you soon.